Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.74% there. On the S&P 0.8%. Semiconductor did the same. Dow 1, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are green today. Bitcoin, gold, silver miners are flat. Dollar up, oil up, treasury bond down. VIX is down about 5% there. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday, and it looks like we actually saw a down gap this morning here. As you can see, this is where we closed, and that's where we open here. So you can see that 394 area, which we extensively talked about yesterday, that was a prominent low. And this was kind of a likely area for the market to kind of trap both bulls and bears, right? A lot of bulls who might have gone long anywhere in this vicinity, they might have placed their stop underneath this level right here. And the market is really good about sniffing that kind of stuff out. So when we saw that down gap this morning when it opened here, probably all the stop losses were taken out, and most of them got stopped out. And maybe the short sellers were getting really excited with the down gap, so they continue possibly with the shorting the market. And you can see on the second hour or so, you can see second and third hour, that level, right, that 394 level, which was a previous resistance, right, previous support right here. And that's the level we can see acting as new resistance right here, second hour and third hour. That upper wick definitely telling us that story. And so once that level, I think this is a level that a lot of people are probably ascertaining that this probably is going to be the new level of resistance, possibly some sort of a bear flag or some sort. A lot of people potentially looking for the downside move, but when that fourth hour push happened, I think this is where probably a little bit of that short seller squeeze come about. However, the micro-term moving average was right on that vicinity right here. So you can see on the fourth hour, there was that upper wick letting us know that micro-term moving average coinciding with the prior resistance right here. They're all acting as resistance. So on fourth hour, we came back down below that micro-term moving average. However, on the fifth hour, bulls pushed up above the 396. And as you can see, my short-term moving average, that been acting as a resistance right here. And that's short-term moving average did make the price come down at least 2-3 days in a row, as you can see right there. So it has quite of a presence, I think. So on that fifth hour, definitely market is aware of it, because you can see on that fifth hour, we closed just underneath that short-term moving average on that fifth hour. However, in the last hour, use that old resistance right here, right? Old resistance as new support. It kind of propped itself up. And on the 6th hour, we definitely saw that follow through. Perfect. So you can see market finally made a way after trapping some both bulls and bears in that vicinity, making a lower low, and then it gets right back up. So bulls, with this move, bulls gather a couple weapons here. You can see the micro term has been reclaimed, and it looks like the short term moving average also been reclaimed. Some of those moving averages, bulls can potentially utilize as a new support should there be any kind of decline or slide going into tomorrow. So you can see the one-day move is not gonna develop a trend. You can see there's a one-day move, we fail back down. There's a one-day move, comes right back down. One-day move comes back down. One-day move comes right back down. So one-day move is not going to cut, especially in this market. Buyers definitely, desperately seeking for that follow-through. Bulls can potentially maybe grind here for a day or so, maybe flag it out a little bit and utilize that short-term and the micro-term moving average to act as new support, and then push up, possibly early next week. But they cannot stay longer than a day or so, because again, that's overall sentiment is still bearish. Seeing all these moving averages. I mean, yes, we did reclaim the short term and the micro term, but you can see some of these moving averages are coming down still. They're still sort of in that downward trend. So that overall sentiment is still bearish. There's still a lot of selling pressure here. So if they hang around here too long, sooner or later, bears going to bring it right back down. Again, mid-term moving average, that blue dotted moving average, the thick blue right here, the long-term moving average, and 400 is all that vicinity. So that's going to be the ultimate battle. If bulls want to go after that 405 down gap and attack that level, they must conquer this 400 level to the upside. Let's check out that oscillator. So I extensively covered this on the last night's analysis, where we talked about that it seemed as though that bullish, that shoulder, the shoulder bullish divergence seemed like that bullish divergence was going to be nullified. That's what it seemed like when it did curl back down. However, what it did was it actually cultivated wider version of bullish divergence. So lower low here on the price action, and then higher low on the oscillator, right? And here's a hidden divergence as well. You can see these are lower highs on the price action and higher high on the oscillator. So when the bullish divergence appears, bulls are trying to find their momentum, find their time, right? Find their opportunity to make that move while the bears are getting tired as they push it down. So that's when you're gonna see these bearish divergence forming, and when they do form, usually bulls gonna pop it. Bulls gonna at least have a short to micro term push, and that's kind of what we've been witnessing. Yes, we had bullish divergence here, and there was that pop, right? There's a shorter, and then there's a wider bullish divergence, and there's that pop. But then again, that one-day pop is not gonna cut it. Especially in this market, definitely though the oscillator is, fully curled up, and we are the trajectory is to the upside. We are advancing, and so bulls desperately seeking for a higher move, continuation move, and to reclaim that 400. If not, some of these longer term moving averages right here, they're all gonna pressure the buyers, and bulls are not gonna find another type of opportunity. If they can't seize this opportunity, bulls are not gonna find another opportunity for a while, and bears gonna use that to make new lows. So this is the important level for both bulls and bears. Bulls wanna find that breakthrough, break above the 400, break above the midterm and the long-term moving average, and attack 405 down gap. And bears obviously don't wanna do any of that, so they wanna protect 400 as a resistance. I'm coming back for you. We'll reassess the situation. Enjoy your evening. Look trading tomorrow.